Good morning, everyone, and welcome to the Sales and Use Tax webinar regarding swimming pool installation, repair, and cleaning and maintenance services. My name is Heather Bro, and presenting with me today is my colleague Amy Nguyen. And just to make sure you're aware, this webinar is being recorded, so you can refer back to it at a later date. We'll start today's presentation off with some general information about getting started in business, and then we'll walk through some details to keep in mind when it comes to tax and record keeping. Next, we'll highlight a few areas where contractors often have questions, and then we'll dive into how sales and use tax apply to swimming pool services, and let's go ahead and get started. So on the screen, you'll see our presentation disclaimer. I'll briefly review it so we can move forward. The information in this presentation is intended to provide general information for taxpayers and tax practitioners. It is not intended to explain in-depth current department policy or practice. The information contained in this presentation is not intended to supersede, alter, or otherwise change provisions of the Connecticut General Statutes, regulations, department rulings, or tax guidance. And now with the housekeeping out of the way, I'll turn things over to my colleague Amy to dive into the first topic.
Thank you, Heather. I am Amy Nguyen, a revenue examiner here at DRS, and we have a lot of information to get through today. So let's begin. Good morning, everyone, and congratulations on starting your own business. Depending upon the business structure you choose, you will need to file certain tax forms to report your business income. In addition to understanding the requirements of the Connecticut Department of Revenue Services, a new business owner should become familiar with the requirements of other state agencies, municipalities, and the federal government. You can find information on the DRS website and on business.ct.gov, which is a one-stop shop website designed to help you find information required to start up a new business or manage your existing business, including a customized checklist tool, a virtual assistant to answer your general information questions, and much more. First and most importantly, as a new business, you must register with DRS by visiting MyConnect. Contractors, including subcontractors, must obtain a Connecticut Sales and Use Tax permit from DRS prior to providing any services in Connecticut, even if the services provided are not taxable or if the contract is with a tax-exempt entity. In addition to obtaining a sales and use tax permit, a non-resident contractor is required to meet the requirements imposed on such contractors. When purchasing an existing business, the new business may not use the sales and use tax permit issued to the previous owner. A new sales and use tax permit must be obtained. Another very important part of having your own business is keeping accurate and complete records of all transactions subject to tax and all purchases made by the business for resale if applicable. These records will assist the contractor when filing federal and state tax returns and must be available if the business is audited. These records must be kept for at least 6 years. Contractors making purchases on resale must maintain records that show how sales or use tax was later paid on those purchases. Other records the business must keep include records of sales, purchase records, state and federal tax returns, including schedules and worksheets, documents that show price changes, general ledger, sales, purchases, accounts receivable, and accounts payable journals, and resale and exemption certificates and records of purchases made with the certificates. One question that we tend to get a lot is what is considered as and what is included in a service charge. A contractor's service charge, sometimes referred to as the labor charge, and those terms are used interchangeably. The service charge is determined by subtracting the cost of materials, including the tax paid on materials, from the total contract price. In other words, every cent above the contractor's cost of materials physically incorporated into the real property, plus the tax paid on those materials, is considered the service charge. The service charge includes the actual labor charge, any markup or profit on labor, any markup or profit on materials, overhead expenses, tools or equipment purchase or rentals, including tax paid on the rental, and reimbursed expenses incorporated into the bill, whether or not the charges are separately stated. This is the type of language that is normally used on the contractor's bill to the final customer. The general contractor has two options to choose from when billing the final customer. The first option is where the general contractor breaks the bill of the property to the property owner into three components: the materials consumed, including tax paid on the materials, the service charges, including the markup on materials, overhead expenses, reimbursed expenses, labor charges and profit, and lastly, the sales tax on the service portion of the bill, if applicable. As you can see in this example, the sales tax of $38.10 is separately stated on the bill. This amount is held in trust and must be remitted by the contractor. For this job, the contractor will remit $38.10 in tax with his return. The second option is where the general contractor does not break the bill down and only a total charge is shown on the bill. Just as in the first option, the bill includes the materials consumed, including tax paid on the materials, service charges, including the markup on materials, overhead expenses, reimbursed expenses, labor charges, and profit. And in this example, it includes the phrase sales tax included on services. In this second example, the contractor bills its customer. Total labor and materials is $1,063.50, sales tax included on services. The contractor must remit the sales tax on the service portion of the bill only with its return. If the contractor has already paid $12.70 in tax to its vendors on material purchases of $200, the sales tax on the $800 service portion of the bill is $50.80. Now, before we continue to the next slide, there are a few side notes that I'd like to mention. First, sales tax on the service portion of the bill may be backed out by multiplying the entire service charge by 0.9403. The result equals gross receipts from services. Subtract the gross receipts from services from the entire service charge. Second, regardless of the option chosen, the general contractor must keep accurate records of the actual costs of materials and service, including all subcontracting costs. The general contractor charges tax to the final customer only on the service portion of the contract. The purchaser of a taxable good or taxable service is responsible for paying use tax to DRS unless the retailer provides the purchaser with a receipt that shows sales tax was charged and in one of the manners described above. And lastly, a sales invoice or an American Institute of Architects AIA document, such as an application and certificate for payment and/or continuation sheet, is an acceptable receipt. A contractor does not constitute a receipt. Okay, continuing on. Now let's talk a little bit about contractors paying sales or use tax on purchases. Contractors are considered to be the consumers of the material and supplies used to perform their contracting services. What this means is that the contractor must pay sales tax on their purchases and generally cannot buy materials with a resale certificate. The only exceptions are A, use of a resale certificate. A resale certificate cannot be used when purchasing materials unless one of the following conditions is met. The contractor has a store that sells building supplies or sells particular building materials such as windows, doors, lumber, or sheet metal to the property owner and states on the invoice all of the following. 1. the charge for the materials. 2, the exact quantity of the materials being sold. And 3, additional price for which the contractor will install the products being sold. In both cases, the contractor must charge sales tax on the materials and taxable labor, if any, unless the transaction qualifies for an exemption. These exceptions generally apply to the contractors that also maintain storefront businesses, such as plumbing supply stores or lumber yards. Items taken from the inventory of a storefront business for use in a construction contract are subject to the use tax on their cost. The contractor is responsible for self-assessing the use tax and should not charge its customers tax on items taken from inventory. The other exception is B, when material is incorporated into charitable, religious, or governmental property. A contractor that enters into a construction contract with an exempt entity may purchase, exempt from tax, the materials that will be installed or placed and remain in the real property. Not only are contractors required to pay sales and use tax on the materials that they use on projects, but they are also required to pay sales and use tax on the purchase, lease, or rental of all tools used in their trade. This includes hand tools, power tools, consumable products, ladders, scaffolding, and other equipment. Contractors must pay tax on tools even if they will use them on exempt projects. Now you might be thinking that oftentimes you see that general contractors will purchase the services of subcontractors to complete a project. Now, how is this done? There are two possible methods of purchasing subcontractor services. The general contractor issues a resale certificate to subcontractor, or the general contractor does not issue a resale certificate to the subcontractor. Now, first, let's discuss what conditions must be met in order for a general contractor to purchase a subcontracting service for resale. The subcontracting service is an integral, inseparable component of the service to be sold to the end customer. An integral, inseparable component is essential to complete the performance of the final service being sold. If the job is taxable, the contractor charges the end user tax on the entire service bill. The general contractor may not use or consume the service purchased for resale. For example, a general contractor that hires the services of a temporary help agency to provide a secretary for the contractor's office must pay tax on that service and cannot purchase it on a resale basis because the service of a secretary is not an integral and inseparable part of the service to be sold to the end customer. And both the subcontracting service and the final service to be sold are services listed in the state statute as taxable services. What this means is that the resale certificate may not be used to purchase or sell any services performed on new construction other than services taxable to all real property. Any services performed on owner-occupied residential real property, again, other than services taxable to all real property. Any other taxable services not enumerated in the statute, such as telecommunication services, and any non-taxable services, such as engineering and architecture and design services. If these conditions have been met, and the general contractor purchases a subcontracting service for resale, let's discuss how the subcontractor's bill to the general contractor might look. Subcontractors are responsible for paying tax on the materials used in performing a subcontract, and subcontractors may only resell the service portion of their bill. A subcontractor's bill to the general contractor should be broken out into two parts when the general contractor issues a resale certificate. First part is materials consumed, including tax paid on the materials. And the second part is the service charges. Service charges include markup on materials, overhead expenses, reimbursed expenses, labor charges, and profit. Now keep in mind, if the sale is a taxable service, the general contractor should charge tax to the property owner on the service portion of the bill only. Also, if the subcontractor does not break out the charge for materials from the charge for service, the general contractor is required to charge sales tax to the property owner on the entire amount of the subcontractor's bill. And lastly, if the service is performed for an exempt entity, a subcontractor may issue a resale certificate to the general contractor as long as the above conditions are met. In comparison, if the general contractor does not issue a resale certificate to the subcontractor and it is a taxable transaction, then the subcontractor must charge the general contractor tax on the service portion of the bill. Since the subcontractor is the consumer of the materials used in fulfilling the construction contract, the subcontractor has two options to choose from when billing the general contractor. Option 1, this is where the subcontractor breaks the bill into 3 parts. That would be the materials consumed, including tax paid on the materials, the service charges, which include markup on materials, overhead expenses, reimbursed expenses, labor charges and profit, and sales tax on the service portion of the bill. Option 2, subcontractor does not break the bill down. Only a total charge is shown on the bill. The bill includes materials consumed, including tax paid on materials, service charges, which include markup on materials, overhead expenses, reimbursed expenses, labor charges and profits, and it must include the phrase sales tax included on services. Sales tax on the service portion of the bill is calculated by multiplying the entire service charge by 0.9403. The result equals gross receipts from services. Subtract the gross receipts from services from the entire service charge. The difference is sales tax on the service. Both methods require the subcontractor to charge sales tax on the service portion of the contract. Only the service portion of the general contractor's bill to the property owner is subject to tax, since the subcontractor has already charged the general contractor tax on the subcontractor's service. Now, I know this was a lot of information to take in, and I thank you for sticking with me. I'm going to hand it back over to Heather so she can give you some information regarding swimming pools. Heather?
Thanks, Amy, for that great overview. With those core concepts in mind, like registration and resale certificates, let's take a closer look at how sales and use taxes apply more specifically to above-ground pool services. So, to jump right in, the installation of an above-ground pool is not a service to real property because the pool is considered to be a tangible personal property and thus follows the rules for installation labor for tangible personal property. The installer is considered a retailer of the swimming pool kits and purchases of all materials exempt by issuing a resale certificate to the contractor's supplier. The installer collects tax on the sale to the end customer. And for labor, the contractor does not collect tax on separately stated installation labor when installing the above-ground pool on new construction, owner-occupied residential property, existing commercial property, existing industrial property, and existing income-producing property. Now, regarding repairs to above-ground pools, well, repairs include, but are not limited to, replacing a ripped lining or repairing the vinyl, aluminum, or wood frame of the pool. The contractor performing repair or maintenance services can purchase integral parts for the above-ground pool without paying sales tax to the vendor by issuing a resale certificate. Now, the bill to the customer should be broken down into 2 components. 1, integral parts, and 2, labor. The total bill is subject to tax when the above-ground pool repair is performed on new construction, owner-occupied residential property, existing commercial property, existing industrial property, and existing income-producing property, also known as rental properties. And now that we touched on above-ground pools, let's move on to in-ground pool installation and services. So it's important to note that the installation of an in-ground pool is considered a site improvement, which puts the property affected to a new use. Therefore, the original construction of a pool, where a pool never existed before, is considered a new construction contract. So regarding materials, the contractor pays tax on all purchases of materials incorporated into the swimming pool, including, but not limited to, built-in lights, cement, filters, gravel, liners, lumber, pipes, swimming pool kits, and tile. Regarding labor, the contractor does not collect tax when constructing the pool in new construction, owner-occupied residential property, existing commercial property, existing industrial property, and existing income-producing property. And this brings us to repairs and replacement of in-ground pools. So the replacement of an existing in-ground pool is not considered a site improvement, and therefore follows the rules for repairing an in-ground pool. Now, repairs to in-ground pools include, but are not limited to, filling in cracks in the cement, replacing broken tiles, replacing or patching ripped linings, and replacing built-in light fixtures. Now, regarding materials, the contractor pays tax on all purchases of materials used in repairing the in-ground pool, including, but not limited to, cement, tile, and vinyl lining. And regarding the labor charge, the contractor does not collect tax when repairing or renovating an in-ground pool that is built on owner-occupied residential property. However, the contractor must collect tax when repairing or renovating an in-ground pool that is built on any existing commercial, industrial, or income-producing property. Now, following that, we're going to start to pull things together a little bit. So, for swimming pool cleaning and maintenance services, they include, but are not limited to, chemically treating the pool, chlorinating the pool, opening the pool for the season, shock treatment, and any skimming, winterizing, or vacuuming of the pool. Continuing on, regarding materials, the swimming pool cleaning and maintenance contractor must pay tax on all purchases of materials used in cleaning or maintaining the pools. So for labor, the contractor must collect tax when performing swimming pool cleaning and maintenance services to any new construction, owner-occupied residential property, or any existing commercial, industrial, or income-producing property. And this brings us to repairs for pool filters. So the contractor must collect tax when the sale or renewal of a repair or maintenance or warranty contract on the filter and repairs to or maintenance of the filter, except when performed under a service contract and no additional charge is made for this repair. Now, the bill to the customer should still be broken down into two components: integral parts and labor. So the total bill for the maintenance and repairs to the filter is subject to tax when these services are performed on new construction, owner-occupied residential property, and any existing commercial property, existing industrial property, or any existing income-producing property. Now, on my final slide, before I turn things back over to my colleague Amy, I'd like to cover integral parts. So the term integral part means a part such as a circuit board, a heating element, control panel, or gear that retains a separate identity, even after being incorporated into the repaired equipment. The term integral part does not include materials such as lubricants, coolant, stain, paint, varnish, glue, solder, and wire that do not retain their separate identity after being used to repair tangible personal property, but are consumed by the contractor. So the contractor performing repair or maintenance services can purchase integral parts for the filter without paying sales tax to the vendor by issuing a resale certificate. Integral parts purchased for use in performing services under a maintenance, repair, or warranty contract are not subject to tax unless a charge for the parts is made by the contractor to the customer. And now that we've covered swimming pools, I'd like to bring back Amy to guide us through the next section regarding hot tubs.
Thank you, Heather. Let's start by reviewing the installation of standalone hot tubs and spas. Standalone hot tubs and spas include, but are not limited to, portable hot tubs and spas, move and plug-in hot tubs and spas, and hot tubs and spas that are not permanently installed into real property. The installation of a standalone hot tub and spa is not a service to real property because the hot tub and spa is considered to be tangible personal property and follows the rules for installation labor for tangible personal property. The installer is considered a retailer of hot tubs and spas and purchases all materials required by issuing a resale certificate to the contractor's supplier. The installer then collects tax on the sale to the end customer. Also, it is important to note that the contractor does not collect tax on separately stated installation labor when installing the hot tub and spa on either new construction, owner-occupied residential property, existing commercial property, existing industrial property, or existing income-producing property. In some cases, there are standalone hot tubs and spas that require the installation of a concrete pad, an electrical circuit, and a gas line if the heater is to be fueled by gas. The installation of these 3 items is a service to real property. The contractor does not collect tax on separately stated installation labor when installing the concrete pad, electrical circuit, and gas line if it is done in new construction or in owner-occupied residential property. But on the other hand, the contractor must collect tax when installing the concrete pad, electrical circuit, and gas line if it is done in existing commercial property, existing industrial property, or existing income-producing property. So that is the installation component. But what about repairs? Repairs include, but are not limited to, replacing a cover or repairing the vinyl or wood frame of the hot tub or spa. The contractor performing repairs or maintenance services can purchase integral parts for the standalone hot tub and spa without paying sales tax to the vendor by issuing a resale certificate. The bill to the customer should be broken down into 2 components, the integral parts and the labor. The total bill is subject to tax when the standalone hot tub and spa repair is performed on new construction, owner-occupied residential property, or any type of existing property. Now, let's talk about built-in hot tubs and spas. For the installation of built-in hot tubs and spas, the contractor pays tax on all purchases of materials incorporated into the built-in hot tub and spa, including, but not limited to, built-in lights, cement, filters, heaters, gravel, liners, lumber, pipes, pumps, hot tub and spa kits, tile, and valves. Unlike material, the contractor does not collect tax on labor when constructing the original built-in hot tub and spa in new construction, owner-occupied residential property, or any type of existing property. The installation of a built-in hot tub and spa is considered a site improvement, which puts the property affected to new use. Therefore, the original construction of a built-in hot tub and spa, where a built-in hot tub and spa never existed before, is considered a new construction contract. Moving on to repairs, to the replacement of an existing built-in hot tub and spa is not considered a site improvement, and therefore follows the rules of repairing a built-in hot tub and spa. Repairs to built-in hot tubs and spas include, but are not limited to, filling the cracks in cement, replacing broken tiles, replacing or patching cracked linings, and replacing built-in lighting fixtures. The contractor pays tax on all purchases of materials used in repairing the built-in hot tub and spa, including, but not limited to, cement, tile, or vinyl lining. Regarding labor, the contractor does not collect tax when repairing or renovating a built-in hot tub and spa built on owner-occupied residential property, but the contractor must collect tax when repairing or renovating a built-in hot tub and spa built on existing commercial property, existing industrial property, and existing income-producing property. So far, we've discussed installation and repairs, so let's continue on to cleaning and maintenance. The hot tub and spa cleaning and maintenance contractor pays tax on all purchases of materials used in cleaning or maintaining hot tubs and spas. The contractor must also collect tax when performing these services to new construction, owner-occupied residential property, or any type of existing property. When performing repairs to the hot tub and spa filters, heaters, and pumps, the contractor must collect tax on the sale or renewal of a repair, maintenance, or warranty contract on the filter, heater, or pump, and repairs to or maintenance of the filter, heater, or pump, except when performed under a service contract and no additional charges are made for the repair. The bill to the customer should be broken down into two components. Those are integral parts and labors. The total bill for maintenance and repairs to the filter, heater, or pump is subject to tax when these services are performed on new construction, owner-occupied residential property, or any type of existing property. Just as Heather previously discussed in the swimming pool section, the contractor performing repair or maintenance services can purchase integral parts for the filter, heater, or pump without paying sales tax to the vendor by issuing a resale certificate. Integral parts purchased for the use in performing services under a maintenance, repair, or warranty contract are not subject to tax unless a charge for the parts is made by the contractor to the customer. Now that you know how and what to charge sales tax on, don't forget to complete and submit Form OS 114, Connecticut Sales and Use Tax Return, electronically by using MyConnect. This form must be filed for every reporting period, even if no tax is due or no business activity was conducted for a particular period. Taxpayers are responsible for filing a timely return, whether they are a monthly, quarterly, or annual filer. The due date for the filing form OS 114 is the last day of the month following the end of the reporting period. If a return is filed late and a payment of tax is due, additional charges for penalty and interest will apply. And finally, Heather is going to wrap things up with a few more additional resources that you may be interested in. Heather?
Thank you, Amy. Now I'll cover some useful tools on our site and where to go for more support. So first up, we have our Taxpayer Education Center. Now, the Taxpayer Education Center was created through a taxpayer lens to assist Connecticut taxpayers in finding the specific tax information that they need to easily file and pay their Connecticut taxes. The Taxpayer Education Center is updated frequently with the most current tax topics, and includes videos to guide taxpayers through how to file in the quickest, easiest, and most accurate manner. Now, if you're interested in attending another live webinar or an event, well, be sure to access the calendar of upcoming DRS education and outreach tax events. And as a reminder, this webinar is being recorded and will be posted to the Taxpayer Education Center in about a week's time. Next up is our new Business Resource Center. The new Business Resource Center is intended for new business owners to find helpful information and everything that they need to meet their Connecticut tax obligations. In addition to explaining state tax obligations for new businesses, this site also provides in-depth information and other educational resources for any business owner, whether they are self-employed, an independent contractor, or a business with employees. And while we're on the topic of helpful resources, please note that DRS is committed to providing timely and helpful information for Connecticut taxpayers and tax practitioners. So DRS embarked on the development of a communication tool. The DRS Tax Topics newsletter is a quarterly newsletter that provides general information for taxpayers and tax practitioners. It includes department news, seasonal topics, upcoming educational events, and much more. So be sure to subscribe to the DRS Tax Topics newsletter through the QR code on the screen, or by visiting the DRS website at portal.ct.gov/DRS. And if you have any further questions, our business hours are Monday through Friday between the hours of 8:30 a.m. and 4:30 p.m. You can give us a call at 860-297-5962, or you can send us an email at drs@ct.gov. Lastly, you can contact the department through MyConnect using secure messaging. Also, be sure to find us on social media such as Facebook, LinkedIn, Instagram, X, and YouTube. And with that, we've reached the end of today's information session. Thank you again for joining us today and your interest in today's Sales and Use Tax webinar regarding swimming pool installation, repair, and cleaning and maintenance services.